Welcome everyone to Vested Interest. This is Shane back again from our Stock Pick of the Day video. It is November 6th. We're going to take a look at Colgate Palmolive out of the consumer staples sector. I know I missed yesterday. Apologies for taking the day off, but it was election day. I had already voted. I got the day off from work, so I spent the day in the woods. I vote by mail typically in every election, have since I was in the military, so I had mailed that in weeks ago. Hopefully everyone made it out to vote. Don't care to talk about the election or the results. This isn't a political channel, so if you want to get into some of that, you can go to another site and speak about it to your heart's content. We're going to take a look at Colgate Palmolive out of the consumer staple sector. Now, before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. I know a lot of you watching the channels out there aren't subscribed based on the metrics that YouTube feeds me, so hitting that subscribe button will help to grow the channel. Really do appreciate everyone who has taken the time to do that. Click that notification bell down below so you're notified whenever we put out any new content. I do this Stock Pick of the Day video series Monday through Thursday whenever the market's open. Well, typically I do take a day off from time to time. Like I said, I did miss yesterday. And a couple new features on the channel here because of the watch time and the amount of subscribers. So again, thank you to everyone who's subscribed. We have been able to monetize the channel. Basically, that means we're able to earn revenue from ads on the channel. So you may see some ads now on the videos. If you watch those, some revenue will come back to the channel. Appreciate it if you do. For those of you who click through those, a lot of times I do as well. If they're not relevant to something I want to, completely get it. And there's another way you can use the thanks button if you want to make a donation to the channel. You'll go down below, you'll click those three little icons there. The thanks button will come up. You'll click that. I think there's like a $2, $5, $10, and $20 tier. Completely understand if you can't do that. Finances are tough for everyone right now. I understand that. For those of you who may be able to, really appreciate that as well. The funds, any funds I get from the thanks or from advertisements are going to be split up three ways: into my portfolio and then into both of my daughter's custodial accounts, as well as what I will be doing with those funds after obviously I pay any taxes that are associated with that. And again, thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. And this particular option right here is definitely because of you. That's one of the criteria. You have to have so many subscribers and you have to have so much watch time. Now, this is the vested interest stock screener. This is how I look at a company on a high level to see if I'm interested in adding it to my watch list. Thousands of stocks out there in the market. This gives me a quick way to run through, quickly to see if I want to add it again to my watch list and do more of a deep dive into the financials of the company. If it makes it onto my watch list, that does not mean I'm buying necessarily. It just means I want to do more of a deep dive, looking at the financials, the income statement. I'm looking at their balance sheet. I'm looking at stuff like debt to equity ratios. Is their revenue growing over time? Is their margins expanding over time? Are they buying back shares? What are their assets over liabilities? If they had to sell off some assets, do they have enough to pay off their liabilities? Are they decreasing their debt? What is their PEG ratio? And what is it compared to other companies? What is their price to book compared to other companies in a similar sector? Stuff like that is what you should be looking at, and a lot of others is stuff that you should be looking at if you are investing in individual stocks. And if you don't want to do that kind of research, nothing wrong with that. You can still invest into the market. Warren Buffett recommends something that tracks the S&P 500, so something like VOO, the Vanguard ETF, something like SPY, SPY. I think both of those are in his 13F. If you look at his Berkshire Hathaway 13F, you'll find them in there. And there's several others out there that track the S&P 500. It doesn't have to be an ETF, could be an index fund as well. So check one of those out, and that way you can invest into the market. Just do whatever your weekly purchase is, bi-weekly, monthly, quarterly, once a year, whatever your timeline is. Dump money into that particular fund, whichever one you decide, and keep on doing so. And then while you're doing that, you can learn about investing into individual stocks and how to research companies, and then maybe branch off into some individual companies in the future. But don't let it be a deterrent to investing into the market. Don't think that you can't do it because you don't know how to research a stock, right? That's the point of that conversation. Now, back to Colgate Palmolive. You can check them out at their homepage, www.colgatepalmolive.com. That's www.colgatepalmolive.com. That is their homepage where I pulled this information from. Our history: the small soap and candle business that William Colgate began in New York City in the early 19th century is now, more than 200 years later, a truly global company serving hundreds of millions of consumers worldwide. Throughout this history, Colgate people and Colgate values have been at the heart of our success. And these are some of their brands, definitely not all of their brands. If I put them all on here, they'd get pretty small to read, but obviously Colgate Palmolive, the two big ones that right in the name, and other stuff, Hill soft soap, Speed Stick, you may be aware of, Irish Spring soap, Lady Speed Stick, Murphy's Oil, a lot of others, Palmolive over here again. So there's a lot of other products that are under theirs, and obviously, Pets Nutrition. So it's not just soaps and deodorants. There's a lot of other brands underneath their umbrella as well. So check all of those out. Go to their homepage, see what they provide. They're providing products, consumer products, to a lot of people around the world. Some of them, Ceriso, I don't know, that may be in another country, but some of them are specific to other countries that they cater to, not necessarily found here in America, or they're just some that I'm not aware of. I don't know what Ceriso is, but some of these other, definitely Colgate Palmolive, Lady Speed Stick, Speed Stick in general, Hills, I've seen the Pet Nutrition, and I actually, be honest with you, I didn't even know they were in Pet Nutrition. So it was interesting to see some of the products that they're interested in. Again, www.colgatepalmolive.com. And the reason we are taking a look at them today, down 4.3% on the day. We are talking about Colgate Palmolive Company, ticker CL, out of the consumer staples sector. Closed out the day at $90.21. 52-week range as low as $74.67, as high as $109.30. So they are closer to their 52-week low, though they are not within 15% of their 52-week low. They need to be under $85 and some change there to be within 15% of their 52-week low. Market cap of $73.703 billion, a beta of 0.4, so they are less volatile than the overall market, even though today was a volatile day. PE ratio seems elevated for a company like this at 25.92. That's more in line. Heck, I even think that's higher than Google right now. I've been buying Google. I'm pretty sure that's higher than Google right now. So that's pretty high. That's kind of looking like a tech company's price to earnings ratio. Should be lower, in my opinion, for a company this big and growing the way it is. EPS, earnings per share, sitting at $3.48 per share. Earnings date coming up January 31st of 2025. Yeah, we're only a couple months away, not even quite. We're already in November, so less than 2 months away from January 2025, believe it or not. So tune back in and check that out if you're interested. I don't cover it on the channel, but you should check it out if you're buying this company or interested in buying this company. Forward dividend is $2. They are quarterly payers, so divide by 4, though we will see that here in a little bit. Dividend yield starting out at 2.12%. Decent dividend yield, starting dividend yield anyway. Ex-dividend date, October 18th. So they did just pay out, or they're going to pay out on the 15th here coming up. So those of you who've been holding them for a while, the day before the ex-dividend date, since at least 10/17, you'll get your dividend here coming up on the 15th. Now, their one-year target estimate, $105.23. Not quite back up to their 52-week high, but it is upside from where they currently sit at the $90.21, at least according to Yahoo Finance. Jumping over to the right, we're going to take a look at dividend yield theory to see if this one is potentially undervalued. To do that, we look at their 5-year dividend yield average at 2.31%. We compare it to their current over here where it says forward 2.12%, same numbers. And since it is lower at 2.12% than their 5-year average at 2.31%, that speaks to overvaluation on this one. Payout ratio, I like under 75%. They're sitting at 56.32, so under what I'm looking for there. Now, I like growing free cash flow over time. Typically, if a company has growing free cash flow, they have growing dividends to match. So going back to 2021 here, we're going to look at their free cash flow growth. They were at $2.7 billion. 2022 down a bit to 1.8, 2023 back up to 3 billion, and the trailing 12 months so far at 3.4 billion. So they're up again. It looks like, at least in the so far, that we've got to see what they report out for the rest of November and December. But it looks like they're going to be a little bit higher than 2023. So short of the down year in 2022, we do have decent growth. They are repurchasing shares as well, 1.3 billion in 2021. 2022 around the same, 1.3 billion, a little bit less. 2023 down to 1.1, and the trailing 12 months looks like they're back up again to 1.5. So I like that they're repurchasing shares. The repurchase of shares decreased in 2022 along with free cash flow, so we can't account for the drop with an increase in repurchase of shares. Unfortunately, this does look like a down year, so we won't get growing free cash flow. Now, jumping over to stockanalysis.com, this is another source I go to for information, and I always recommend more than one source. You pick any sources that you like. These are just 2 that I like, and they do have 19 analysts that have taken a look at this. They call it a consensus buy, a low estimate of $91. which they currently sit lower than their lowest estimate, which would represent a 0.7% increase in where they currently sit if it hit their low. Average estimate of $105.11. Pretty close to what we saw with Yahoo Finance on the previous page, and it would represent a 16.31% from where it currently sits. And if it happened to hit their high of $122, that would be a 35% increase in the share price. All the while, you could collect that 2.12% dividend yield if you were to buy them now. Jumping over to the right here, I like to look at statistics and look at return on equity and return on invested capital to see how well the company is reinvesting back into itself. Return on equity, 487.92%. Now, I actually don't believe that. I'm going to have to go look this up somewhere else to see if that's actually accurate. If it is, that is the highest I think I have ever seen. Actually, I know that's the highest I've ever seen, and it is extremely high. 487.92% return on equity, and return on invested capital is at 29.12%, both above the 10% I'm looking for there. EPS growth, I like 5% projected over the next 5 years or better. They're at 12.54%, so above what I'm looking for there. And revenue growth is forecasted at 4.61%. Definitely looks nice as well. EPS growth, again, their earnings per share, if you remember their PE, price to earnings, with their EPS growth only going at 12.54. Again, I don't know that if 4.6% revenue growth and 12.54% earnings growth justifies a price to earnings of 25. I just feel like that's pretty high again. Now, going through their history here, again, quarterly payout ratio 57.45%, under the 75% I'm looking for. Growing dividend at 3.66%, 61 years of growth. Buyback yield is positive at 0.83%. Like to see positive buyback yield. Shareholder yield of 3%. Like to see positive shareholder yield as well. Now, going back in time here, 2022 April, they were paying 47 cents. They raised it up April 2023 to 48 cents, April 2024 to 50 cents. I would say 2025 in April would probably be another raise there that they're going to maintain this dividend growth, especially with the payout ratio of only 57%. It gives them room to increase that over time. They do pay out on the February, May, August, November timeframe. So they are off payment schedule of most companies. Most companies are in the March, start in March. But so this is nice. February, May, August, November timeframes. They are off schedule for their payments if you're looking for something that's kind of off the typical March starting payout date. Now the screener, let's jump back to it. Understand the business. That's where we start. Check there. Growing free cash flow over the last 4 years. Nope, they had the one down year, so no check there. Growing dividend, yes, 3.66%. So not, extremely fast, but they're growing. That beats inflation most years. Dividend payout ratio of 75% or less. Yep, they're in the 50% range. I think 57 around there. Check valuation based on dividend yield theory. Dividend yield theory says they're actually potentially slightly overvalued right now. Buy below current cost basis. It is not within 15% of a 52-week low. Again, it needs to be under $85 and some change. So it needs to drop a little bit lower. Return on invested capital or return on equity, both smoking high. Return on equity, I'm still questioning that. Really, do they have over 100% return on equity? That's really, really high. Earnings per share growth over 5%. So check there. So we're looking at 1, 2, 3, 4, 5. Got to beat 5 of 8 to make it on my watch list. This one is on my watch list. I've always hesitated on pulling the trigger with this one because it is slower dividend growth, and I have a few slower dividend growth right now that are in my portfolio. Kraft Heinz is not even growing its dividend, in AT&T, so I'm looking for some things that have a little bit higher dividend growth right now. But this one has always been one I've kept on my watch list just because the business is sticky. I mean, people wash their dishes. You're buying Palmolive. People take showers. Whether the market's good or bad, whether the economy's doing well or not, people are still going to take showers. They're still going to wash their dishes. There's just certain things we do regardless of how the market and how the economy is. And this company sells those particular products, right? You're still going to buy soap. Typically, if you have a dog, and you buy their brand of dog food, you're probably going to keep feeding your dog, or cat. So there's just a sticky business model in this prices that are the products that they do sell. People typically tend to keep buying even when times are bad. So it is on my watch list. Let me know if it's on yours. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of Colgate Palmolive. Let me know what you think of the videos. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section down below. I'll work it in the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable doing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.